Hey everybody, welcome back to the channel. This is my last video for 2023. We're going to take a look at my final returns for 2023 for my stock portfolio. Then we're going to look at all my current positions in my portfolio going into 2024. And I also want to look forward what I think may or may not happen in the market for 2024, and based on those scenarios, how it will impact my stock portfolio. So hopefully you get some value out of this. Thanks again for watching, and let's just jump right into my results. So Charles Schwab calculates my total return this year at 47.28%. And that did beat the NASDAQ, the S&P 500, and the Russell, which we'll look at more closely here in a second. But this graph here, you can see where my portfolio was the entire year. So this top line here is my portfolio return. So I was actually in front of all the indexes pretty much the entire year. We kind of got close to the NASDAQ in November, and then just kind of outpaced a little bit going into December. So I'm happy overall. In fact, I am 50% in cash right now, and that includes my cash position. So if I was fully invested in November and December, I actually had better returns. I probably would have been, I don't know, 55% or higher if I was fully vested at that time. We'll talk more about that in this video and why I'm a lot in cash right now, and that may change going into the future. But you can see down here, the Russell was up about 17% this year. S&P 500 was up about 26%. Dow Jones was up 16%, and then the NASDAQ was up 44%. So here's my current portfolio going into 2024. I have 15 positions right now. There has been some changes over the last month or so, and it's a reason why I'm 50% in cash right now. So even though this says, like RTX is 12% of my portfolio, it's probably more like 6% if you factor in the cash as well. Now, the reason why I'm in cash so high, there's a couple of reasons. So one, with the market going up over the last couple of months, I had sold some calls on some of my positions, and they got called away from me. So my strategy in general is buying stocks that I feel have a margin of safety. I'm trying to get 30% or more margin of safety, hold the stock. Once it gets up to its fair value, start selling calls above what I think the intrinsic value is at those specific strike prices. And unfortunately, some of those actually got called away from me. Ally Financial got called away from me. Academy Sports and Outdoors got called away from me. So those positions got reduced over the last couple of months. So that's why one reason why I'm heavy in cash right now. And then the last couple of months too, I've just been putting money into my pile of cash on the side, as I wasn't really sure going into 2024 what inflation was going to look like, what rate cuts were going to look like as well, which we'll talk more about in this video. So this is kind of how my portfolio is set up right now. My really, 5 largest positions, which are, over 50% of my stock as a whole in my portfolio, and that is RTX, Great Lakes Dredge, Tyson Foods, Wix.com, and then also Ally Financial. I also own Citigroup, Google, Interactive Brokers, Warner Brothers, Academy Sports, Dollar General, Paramount, Trupanion, Vance Auto Parts, and then Douglas Emmett. So, what are my thoughts about my portfolio going into 2024? Well, it kind of depends on really, I think, inflation, unemployment, and also rate cuts going into next year. So Jerome Powell at the recent Fed meeting indicated that there's going to be multiple rate cuts going into 2024. Right now, the market believes there's going to be around 3 or 4, and they think they're going to start mid next year. Now, Bill Ackman recently came out and said he thinks the rate cuts are actually going to begin in Q1 of next year. So I thought that was kind of interesting. So I'll take a stance on my portfolio like this. If rate cuts kind of go according to plan right now, what the market thinks they're going to do, so maybe they do 3 or 4 rate cuts next year, beginning, mid next year, I think my portfolio is going to do okay. I don't think it's going to beat the market in that particular case, especially if the rate cuts become sooner than that and the economy is still rolling really well. Unemployment, seems to be pretty stable. My portfolio is not going to beat the market in that scenario. My portfolio right now is more on the defensive side. So if rate cuts don't come as soon as mid of next year, if the Fed comes out and announces that they're getting pushed back, maybe inflation doesn't stabilize, maybe it goes up the next month, maybe unemployment creeps up, maybe the economy is just not doing as well now in a couple of months. In that particular case, I would see the market have a pullback, and my portfolio is designed to not fall as much as the market as a whole. So it's more defensive right now. Now, what's really interesting is that I read an article here recently that analyzed stocks or the stock market going back to 1951. So when you have the S&P 500 up about 25% or more in a year like we saw in 2023, on average, the market is up 14% the following year. In fact, there's only been 4 times since 1951 where the stock market actually fell, went to the negative the following year after the S&P 500 was up 25%. Interestingly enough, is that 2022 was one of those years when there was a big pullback, because 2021 was a good year for the S&P 500. So if history tells us anything, most likely 2024 will be a great year for the stock market and just stock investing in general. I think we're in really unprecedented times right now, just because we saw inflation creep up incredibly fast, as fast as going back into early 1980s, for example, and kudos to Jerome Powell and the Feds. They've done a pretty good job so far on trying to get to a soft landing, but I still think we're not out of the woods yet, and I am still cautiously optimistic going into 2024. So if you were to ask me, would I rather see a big pullback in the market or see a huge increase in 2024? I'd actually rather see a pullback. I think there are some of the tech stocks and certainly some of the Magnificent Seven stocks I think are overvalued at this time, in my personal opinion. So I'd love to see a pullback from that. But if there isn't, and it's the opposite, and we see a decent run in 2024 where the S&P 500 is up 10% or even more, I think the stocks are going to do very, very well in that type of environment. So one would be small cap stocks. The Russell was up around like 16 or 17% this year. That drastically was less than S&P 500. In fact, if you go back the last couple of years, small cap stocks have just lagged the market just in general. So if the S&P 500 is up 10% or more next year, that would indicate to me that there were some decent rate cuts by the Fed, and the economy is still tracking very, very well. So in that specific case, debt is going to become cheaper, which is going to benefit these really small companies. Not only can they go get more debt, but they're going to qualify for more debt just in general, and it's going to be cheaper as well. So it's going to benefit them. It's also going to benefit like financials, like banks, for example. So I have Citigroup, I have Ally Financial. Those type of stocks, those type of companies are going to do really well in a lower interest rate environment, again, because people are going to qualify for more loans, so they can get out more money. They're going to get more interest. Even though the interest rates are going to be lower, I think they're going to have more clients opting to get loans from them. And of course, really any kind of tech stock is probably going to do really well in that type of environment too. Yeah, and another type of stock that should do really, really well going into 2024, if the market does well, if rates go down, and that is REITs. I mean, REITs have been just demoralized. They've been really lagging the market over the last couple of years, and there's a big correlation to interest rates and how REITs perform, because typically investors that are investing into REITs are dividend type investors. So, one of the stocks I own is Douglas Emmett, ticker symbol DEI. That is a REIT that owns properties in Los Angeles, California, and properties in Honolulu, Hawaii. And I think in normal economic conditions, a stock should be worth around $30 a share. And right now it's at 15. So I think it is, trading at half is what it would be in a normal market. and because of the interest rate environment that we've been in, those type of REIT stocks have been suppressed. So it'll be really interesting going into 2024, kind of how the market trends throughout the year. But I do think it will all be dependent on how the economy is doing, and then also the effect of Powell and the Feds. And do not take for granted the presidential election is this year or upcoming year for 2024. So typically, the market does pretty well in the year that there's presidential campaigns. And if the market and the economy is doing pretty well, there's going to be a ton of advertisements that are going to be pumping into the market, especially the mid of this year and then going into the election season. So, Google and Meta, those type of companies are going to do really, really well in those particular cases. So, what are my plans for my portfolio for 2024 with being 50% in cash right now? And in reality, there's really no difference on 2024 for me. I'm not doing anything different now. My portfolio, yes, is on the more defensive side as it is right now, but I'm just waiting for a stock or group of stocks to fall down every single year. If you look at a particular stock, in most scenarios, that stock fluctuates 50%. I don't care if it's Google, I don't care if it's, Intel, I don't care what that stock is. Most stocks fluctuate about 50% in 1 year. So for me, if I learned anything in 2023, it's just to be patient in general, waiting for hopefully a stock to fall, get into my margin of safety that I'm looking for, understand the business, buy into that, let it run up, and then once it goes with intrinsic value, sell calls on those. And if it gets called away, it gets called away at that time. So I'm not doing anything differently. All I'm doing is just sitting around and being patient as much as possible. But one thing I do know is that I don't know what's going to happen over the next year, but I'm going to be patient. I'm going to wait and see. But I would love to hear from you guys. I mean, what do you think about 2024? Do you think we're going to have a 14% return like that average is when SP 500 is up 25% the previous year? Or do you think there's going to be a pullback? Do you think, the Powell and the Feds are not going to cut rates as quickly as what people think? I would love to hear from you in the comments section. I read every single one of those. Thank you for watching. Really appreciate it. Catch you on the other side. Take care and God bless.